Hey everyone, this is June 6th, S&P 500 daily time frame. So we talked a little bit about in the past few days where the market direction could go. So let's follow up on those thoughts today because we've had a series of green candles. There are green daily candles on the S&P 500, which is certainly a positive sign. Again, what I've been talking about in this market is there is resiliency in the markets, and it's unlikely that we're going to go back down. Let's just say back down to last year's lows. But we can have a small pullback, and this is what the pullback could look like if we did retrace a portion of that move, which is what we're seeing right now. So I'll take a look at everyone's comments yesterday and the day before, and we'll go from there. So sounds good? S&P 500, SPY, daily. What we've been seeing here consistently is a series of green candles means that the bulls are in control. A series of red candles means the bears are in control. And then right now we're in a series of green candles, as you can see, which means that bulls are in short-term control right now. Now in the future, it's not going to be as easy as that, right? It's just from the charts that we can see from right now, that is what we're seeing. And what we are also seeing is, look at these moves, right? These are pretty hefty moves to the upside. 3 candles overtaking 7 red days. And maybe even if you count these red days, but I'm not going to count these. But 7 trading days. That's quite a bit. If you can imagine, usually we go up slower than we go down. And we're actually going up rather quickly. Again, this just shows you the resiliency of the markets, and there are buyers. There are buyers buying the dip, and you just want to keep that in mind. Now, currently what we've had is 281 as a significant and support and resistance level. That has now been removed, and this is for that reason that we sliced through it here, which means that should have acted as resistance this time around, but it didn't. As a matter of fact, we sliced right back up, and therefore for that fact, that is no longer going to be a significant near-term resistance or support. That near-term support or resistance is now being moved towards 273. So what can we expect the next few days? Right now, from what we can see on the daily time frame, bulls are in control until, at the very least, we see a red candle on a daily time frame. That could signal a short-term trend back to the downside. But until then, I think bulls look good in terms of holding this support. Where is your resistance? I think the first resistance is the 50-period moving average at 286.55. But don't be surprised and don't be fooled by the 50-period moving average, because we have not obeyed that moving average in the past that nicely, right? This hasn't acted as a significant resistance in the past, so I'm not placing too much emphasis on that fact. But right now, what we can see here is we're certainly trying to get to the 50-period moving average. We're getting short-term bullish, but in the next few weeks, I think we will still experience volatility both to the upside and to the downside. So, just be careful here because things can whip back and forth rather quickly, and position yourself nicely if you are in the markets. So that is S&P 500. When we look at TVIX, this is showing a downtrend, quite significant downtrend, and look for this downtrend actually to continue. When we look at this move, this is a steady move to the downside, and there's really no stop here. Right now, you can say that there's a support around 2080, but these supports for TVIX can easily be broken right now. And for what it's worth, this is on a downtrend. You can actually see the MACD. And with a bearish cross down here as well. So this pretty much confirms the fact that this is moving lower. So that is TVIX or the VIX. Let's take a look at crude oil. So promising move. So what I want to see is synchronous movement by markets and crude oil. I didn't like what we saw earlier this week, in which the markets rallied and crude oil was flat. Remember that day? Now, crude oil today rallied with most of the markets, which is great to see. Now, this is a start for crude oil. Crude oil, I think, will be okay in the long term, but in the short term, continuously experiences volatility. This is a support level. This 51.72 level is a significant support level, and I'm looking for this level to hold and to be the base of an absolute reversal back to the upside. Obviously, we will need more candles to confirm that fact, and it can take several days, several trading days, for that pattern to evolve out. But that is a support level. The near-term resistance continues to be close to the 20-period moving average, which is curving lower, and that level by that time could be around 55.50 by the time we reach the 20, maybe a little bit higher, around $56. But this is a really good start for crude oil. I like the fact that today we went up 2.9% when the rest of the markets didn't go up by that much, right? Obviously, crude oil is volatile. Yeah, I get it. But this is a good starting point for crude oil. Natural gas continues to be on a downtrend. This looks like it wants to continue going lower. So for what it's worth here, remember we said that we were bearish natural gas upon a bearish break of the support, which is this line here, and the 20-period moving average. And once we broke it, you can see that we eventually continued to dip lower, and this continues to move lower. Maybe we'll have a bounce back towards the moving averages, but we don't have to because this is on a downtrend. With gold futures right now, gold is at near-term resistance, 1346. The next resistance, if we can get over that, is 1363. But gold, it is bullish short term, but it is a little bit far away. So I think this one has a little bit ways to consolidate, perhaps before another push up. This is on a short term uptrend, but this uptrend doesn't have to last that long for gold. So while this is on an uptrend, it could turn bearish, let's say, in the next few weeks to months. All right, let's take a look at a couple of your tickers. We'll start with Coolio's comment. Pullback, expecting to still go down again. Yeah, so just be cautious right now, because when we look at the S&P 500, right, and we had an up day, we continued that up day. Today we continued on that move up. So when the bulls are in control, they're really pounding the fact that, hey, we've gotten the reins, we know the medium and long-term trend, we're gonna get at it, and that's what's been happening. So as fast as things can shift higher, you want to place notice that could happen as well. So thank you, Coolio, for your comment. Amazon. Any thoughts on Amazon by Moviegoer? Thank you for your comment. Amazon, I like it. I like Amazon as a company. I like Amazon's chart. The one thing that if you were to wait for more of a confirmation signal is we certainly did hold this 50-period moving average. You can see this is actually a pretty strong, and for what it's worth here, this is more of a support range. And when I can box this in for you. So you can see that this was resistance in the past, this area. Can you see that? So here was resistance, here was resistance, here was resistance, and then we popped over, that became support. So again, we came down to test the support area because we went into the boxed area and we're coming off of it. So I like Amazon. This is a solid chart. I think this can move higher. So I do like Amazon, but if you were to wait for a more confirmatory signal, you would wait probably maybe a week or two of more trading days to show you that, hey, we can actually get over these moving averages and move higher. But this is a support level that we have held so far. Burns, I put this on Twitter. Did not like yesterday's volume, although we had 89% up day. Interesting. Okay, so yeah, it's interesting. Sometimes I think people do those analysis or seasonal analysis on the markets, which is, I think, pretty interesting to look at too. And if you were looking at the actual day itself, that's interesting. I'm not sure about the correlation exactly, but if you were actually looking at like, oh, hey, May 14th last month, or May 15th, or May 14th of last year, then that's interesting, I think. You have two positions in TVIX. TVIX is so weird, you can't understand the movement of it. So I talked a little bit about TVIX, right? With TVIX, you have to be very cautious with TVIX. TVIX is only great when there is extreme volatility to the downside for markets, and that is when we are in a position of high unexpected down moves. And if you can imagine, if it's high unexpected down moves for broad markets, most people are not going to be expecting it. So most people are not going to be in TVIX at the time of the unexpected down move. So you want to be a little bit careful, because as you can see, once this might be unexpected, right? For what it's worth, this move was unexpected. But once it was shown that it was expected, look what happened. We actually dipped further. So TVIX, for the most part, you have to be very careful here, is more of a shorting instrument for hedge funds and whatnot than a buying instrument, right? So be careful with this one, because markets are, in my opinion, are okay in the medium and long term. I think it can go past all-time highs, right, with time. So that means TVIX will go lower. And in that case, you just want to be a little cautious here with TVIX. Finally, K9. Hey, welcome back, K9. I haven't seen you in a long time, but glad you're here. Let's talk about JD.com. So JD. Okay, so for JD, for this one, what you can see here is this one, I need to see more of a confirmation of an uptrend, because of this. This doesn't look like Amazon. You might look at it first and it looks like Amazon's chart, but it doesn't look like Amazon's chart. We have a downsloping trend line that's a lower low, and this is actually fairly accurate. You can see the support, and I've had this trend line for a long time. It wasn't, I think you might, or someone else might have asked me to look at JD in the past. And what's happening is this is resistance. Can you see that? So until we can solidly break over that resistance over, at a minimum, I think the 50 period moving average, and stay over for a period of at least 2 weeks, I think, this is hard to say that this is going to reverse back to the upside. So you just got to be careful, because we have significant, even if this goes to 30.52, we would be landing right at resistance again. So that is a tough one to say long. It's a little bit tough to say short too, and we might be trapped around this range for a while. So just you have to measure whether your profit or your stop is nicely set, I guess, for this one. So yeah, that's JD. And with that, thank you everyone for watching this video. If you like this video. If you didn't like it, hit that thumbs down button, and check out the course, which is in the description box down below, in the comment section, Facebook group down there as well. And with that, happy trading everyone, and I'll see you all later.